If a bank has knocked you back because of your credit history, or you just don't want to go through a full credit check to access business funding, this video is for you. No credit check business loans are exactly what they sound like. You apply, the lender looks at your business, not your credit score, and makes a decision based on how your business is actually performing right now. Here's how that works in practice. Traditional banks look at your credit file first. If it's got a blemish, a missed payment, a default, a period where things got tight, that can be enough to shut the door before they've even looked at your business. Alternative lenders flip that around. They look at your revenue, your cash flow, your bank statements. If the business is making money and the numbers stack up, they'll lend. A cafe owner in Sydney needed $50,000 to expand her seating area and upgrade her coffee equipment. She'd had some personal financial difficulties a few years earlier that left a mark on her credit file. The bank said no. An alternative lender looked at 3 months of bank statements, saw consistent revenue, and approved her within 48 hours. She expanded, increased her daily customer count by 30%, and had the loan paid off in 18 months. That's what these loans are designed for. Now, a few things worth knowing before you apply. These loans are typically unsecured, meaning you don't need to put up property or equipment as security. That makes them accessible, but it also means the lender is taking on more risk, which is reflected in the cost. You're not going to get the same rate as a secured bank loan. That's the trade-off, and it's worth understanding up front. The application process is usually fast and done online. You'll generally need 3 to 6 months of bank statements, your business financials, proof of registration, and sometimes a tax return. No credit check doesn't mean no assessment. The lender still needs to know your business can repay. A software startup in Melbourne borrowed $100,000 to fund a product launch campaign. No assets, early stage business, credit history that wasn't going to impress a bank. An alternative lender backed them based on their revenue model and cash flow projections. The campaign worked. They got a 200% return on that marketing spend. When you're comparing lenders, look at the total cost of the loan, not just the rate. Ask what fees are involved, what the repayment schedule looks like, and whether there are penalties for paying it back early. A good lender will answer all of that clearly. If they won't, walk away and don't overborrow. Take what you need, make sure the repayments fit comfortably inside your cash flow, and align your repayment dates with when money actually comes into the business. The full breakdown, including how to evaluate lenders, what to prepare, and how to avoid the common mistakes, is in the article below this video. Use it before you apply.